Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, March 26. Enterprise software provider Oracle stands ready to report its fiscal third quarter results after the close of trading on Wednesday. According to First Call, analysts are expecting Oracle to post a profit of 30 cents per share, excluding options expense, on revenues of $5.42 billion. The consensus estimates translate to projected growth of 20% and 22% respectively. That is enviable in its own right, but it is all the more so considering the S&P 500 has registered negative earnings growth in the last 2 quarters, courtesy of the financial sector. Oracle, of course, is exposed to the financial sector through its customer relationships in the banking and financial services industries. That exposure, along with its various relationships in the retail, auto, and public sector industries, have raised some concerns that its results might not be as robust as investors would like them to be. Judging by the recent performance of its stock, though, those are subordinate concerns heading into the report. Since bottoming at $18.18 on February 22nd, shares of ORCL have risen 16% versus a 2% gain for the S&P 500 and a 5.4% advance for the S&P Information Technology Index over the same period. Notably, the consensus EPS estimate for the third quarter has remained unchanged over the past 90 days. In our estimation, that standing reflects some angst that macro factors have stood in the way of Oracle putting up some blockbuster numbers. That's understandable given the credit market stress, the slowdown in the U.S. economy, and the lousy showing by the U.S. stock market in the 3-month period from the start of December to the end of February. By the same token, the unchanged consensus estimate is a testament to the market's belief that Oracle's business is diverse enough from a product, geographic, and industry vertical standpoint that it can still live up to what are arguably some lofty growth expectations in the current environment. Time will soon tell, yet one thing seems certain. With Oracle deriving more than 50% of its revenues outside the U.S. in its last fiscal year, investors will again be reminded of the benefits of a weaker dollar for multinational companies. Oracle, for its part, has reported an upside EPS surprise in each of its last 4 quarters. Mindful of this, the market could initially frown on a report that is simply in line with expectations, particularly since the stock has had a big run in recent weeks. The disappointment would be more pronounced if share buyback activity and/or a lower tax rate come into play as factors that help the company meet expectations. Like any other company, Oracle's outlook will be the main driver of its stock. Aside from the financial guidance, which will drive shares of Oracle, the market will be attentive to what Oracle is saying about customer behavior. Is the sales cycle lengthening? Are customers cutting back on spending? How is the pace of business outside the U.S. and beyond the financial vertical? In more ways than one, then, the market will look to Oracle to live up to its name and provide some prophecy on the economic environment that it will either contribute to or diminish the latest wave of bullishness. I'm Pat O'Hare for Briefing.com. Thanks for listening.